All right. Hey guys, this is Losada with Simple Option Strategies. All right, we're going to be covering today some support and resistance um, principles. And what I'm going to do is I'm going to cover how to identify them and how to leverage it in your trading. Okay. So with that, here is the stuff that we are going to cover today. All right. So I'm going to be covering IB levels, and I'll talk about that, what they are. Moving averages, I think you all heard about those. Dynamic levels of support and resistance, trend levels, using trend lines, basically. Fibonacci retracements, which are really the most important, and Fibonacci extensions, and that is used for the ABCD pattern. So I've got a lot to cover, and I'm not going to go into super depth in this thing, and you can ask the questions on the screen here in the comment section, and I'll try to answer them as I go. All right. Okay. So with that, let me share a different screen here. So I'm going to move this over and share my main screen. So let me move this. Okay. And this. Let's see, did I share that right screen? No, I didn't think I shared the wrong screen. So hold on one second. All righty, let's see here. So let me share the right screen here. Okay, and we are going to share this screen. All right, now we got it. Okay, so this is my main screen where I just take a big picture view of the market and where we are. This is the SPX up here. These are futures. This is MAS and MNQ, and a lower scale here, and then other stocks and indices here that I use in my trading. Okay, but so let's start out with moving averages, and so I'm going to change my screen here. These are basically stocks that I use for the wheel trade, and I have them up and looking at them all the time. But let's pull out one in talking about moving averages. Now, to be honest with you, I don't really use moving averages that much. I'm going to maximize this so you can really see it. Okay. So in this case, what I have is the 200 and the 50. All right, and I have this is Oracle here. Okay, and you can see here that a few days ago, basically, it was kind of choppy. Okay, and it pushed through the 50, and it moved down and moved down. Okay, and this is a 5-minute chart, so it goes pretty fast, right? So once it moved down and then it broke back up, and then moved back down. You can see here where the 50-day crossed the 200. All right, and it broke above both. And a lot of traders will use that as a buy signal at that point. Okay, and you can see here where the market went up, it went down, didn't necessarily, it breached it, but it really held a support. And then it did basically the same exact thing, and now it's kind of moving up as well. All right, and so this is a form of support and resistance, and actually a lot of indicators that you use, Bollinger Bands, MACD, RSI, really are maybe not RSI, but use support and resistance in their indicator to give you signals. All right, and so. This is just one form of, a support line that you can use. All right. So let's go into the 20-day. So let me give you a picture of the 20-day here. Okay, because a lot of traders use the 20, 50, and 200. And so here's a much more momentum type of stock, and this is PHM. It's another one that it's on the list for wheel trades. Okay, and you can see here that it stayed above that 20 moving average until it broke. It broke down into the 50. Okay, and a lot of traders will will use this as well, okay, in breaking, and a lot of times what will happen is it'll go back up to the 20 and then go back down, and it's kind of a short from there, okay. But there's different ways of using it, again, I just wanted to share with you that this is a form of support and resistance, okay. All right, I don't see any questions, so I'm going to move on here, and I know you guys are pretty adept at that. Okay, so what I'm gonna talk about now is IB levels. All right, and I'm gonna share my I'm gonna change my screen again. So bear with me. Okay. Actually, what I'm gonna do is I can bring it up and then just move it over here. Let's see if I can maximize it. Yep. All right, and then I'll bring the screen over. Okay, a lot easier. Okay, so this is these are MES futures. All right. I trade these a lot. And so what I'm going to share with you is what's called the initial balance level, right? And the initial balance level is the basically the first hour of trading, the first hour of the high and the first hour of the low, okay? And so I'm gonna draw it out here, okay, for you guys. And so I have my drawing tools right up here. And it's a price level. Price levels is basically a horizontal line, okay? So there's no ambiguity of whether it's hot or cold, right, or up or down. It's either up or down, and there's no ambiguity like a trend line, right? So the first hour of trading we start at 9:30, okay? And so what I'm looking at here on this line here is 9:32. Okay, so at 9:32 we made a high this morning. Okay, and so what I do is I mark this line. Okay, so that is your high for the day, and you can see here that it in the first 2 minutes of trading we hit a high, and then it just continued to go down. Right now, what you got to do is draw out the low, at that time. So the low was right here, okay? And again, this is the first hour of trading. And so what happens is this kind of sets the stage for your trading futures throughout the day. And so you can see here that the market did break the low, all right? But it broke it for a little bit of time, and then it definitely got some momentum here. And you can see here where we had a higher low, right? And usually a lot of traders will take this and jump in right around this level here. And it's above the IBL, above the IBL low. And then you can actually use a stop on this, below this portion, or you can use the low of the day, right, as a stop. Right, but this is a very, very common trade that traders use, and right now the momentum, this certainly had a reversal, and to confirm that reversal, you would look at the last high here, right, to make sure that it stays above that. A lot of traders will actually wait until they go above this high before they put on a position. But this is just an example of an early lead in, right? Because you had a reversal sign here that you can jump in. Okay, but again, I'm gonna show you here. Let me bring this one back over. Bring it up and bring it down. Okay. Okay. And then what I'm going to show you here, I'm going back to my other charts. Okay. And I'm going to share with you IBL that I had drawn yesterday. Okay. And these IBL levels, actually you can use again and again, even from previous days. They kind of stand. Okay, so this is the IBL that was in yesterday, basically. Okay, and might have been yesterday, might have been the day before, but in any case, it was the IBL high. Okay, and you can see here that you can see here that support or resistance was formed, okay? And this is an hourly chart, so it bounced up against this, all right? And then this morning it finally broke out, but it was kind of a false breakout, okay? So this is a very, very powerful way to look at the market and to know when to get in or when to get out. And when you use these things, this basically, it bounced up against this level, okay, and it went down. Well, you can short this, all right? You can short this and put a stop right above these candlesticks here, all right, and allow this to go down, and it's a good trade. And it happened again. Went down here, hit resistance. Okay, this was resistance, and it went back down. Okay, and again it did it again. Okay, multiple times, and so eventually it's going to break it. It's just going to break it. And today it did break it, but we had kind of a false breakout, and now waiting for to see if this thing continues moving higher or if it falls again. Right, but these are tradable price levels that you can use. And the thing is that a lot of traders are using them, right? And so a lot of traders are using them. That's how support and resistance forms, and they trade off of those, okay? So these are IBL levels. I draw them out every day and figure out, where the good trade is and the bad trade, right? And today it actually looks like we may be going down, because it looks like it's gonna cross that IBL low line again, and possibly go down further. This market's been pretty high, and this is what happens. All right, so let's look at trend lines. All right, and I'm gonna let me see if I can take this back. Okay, and what occurs with a trend line break? Okay, just hold on one second. Here we go. This is a good one. All right. Okay, let me pull that out again. And these are very familiar. Okay, so same futures. Okay, so what you do is this is wrong. Okay, let me get rid of that. All right, so I'm going to bring out a trend line here, okay? And this is the way that you use trend line support, and it's probably something you're pretty familiar with. And the rule of a trend line is that the first 2 points make a trend, and the third confirms it, okay? So you can see here, let's fix this here. And the thing is, with trend lines, are a little bit biased. Okay, they can be biased, right? So you want to find 3 points here. There they are, right there. All right, that's pretty solid. Okay, so it's a pretty solid trend line. It's not too steep, but it hits the point here. Okay, and you see what happened is that we had a nice break. Okay, that was a really, really nice break. Now, sometimes what will happen is that this trend, oops, messed that up. Bring it back down. Okay, let's bring this up here. All right, there we go. What will happen is the market will actually, a lot of times it'll actually go back up and hit the bottom of this. So this trend line support becomes resistance, and then it falls again. And you can see here where it was pretty solid break of that line. Okay, and again, this is very, very tradable. All right, and let's move. Let me see if I can move this. Here we go. Okay, I'm going to move this over here. Right, and we'll see what happened after. Well, it went down and it went back up. Okay, but the thing is, we had a nice break here. The market went down again. It's a short-term trade. Okay, you could have held it because it didn't go above this level here. It was a lower low, and then it went down to this IBL level. Okay, so it's an IBL level down here, from a previous day that was basically support. And then these two areas here, you can see support here, support here, support here. Okay, once it went down. And so that's why I keep these lines around. Okay, and this happened to be, I think, I can't remember which line it was, but it was one of the lines that I drew previously, where you catch this support level, and it's pretty strong. I mean, it's pretty strong that it didn't break here, and then it shot up again. All right. Okay. So that's basically the use of a trend line. All right. So now let's get into the meat of this stuff here. Oh, okay. Let's bring this down. Might not be able to. All right. Let's move it. Bring it down. Okay. All right. Okay, now let's talk about fibs. All right. So in my the way that I use fibs, I use them in a lot of different ways, right? And let's see. Okay, let me go back to the screen here because I want to make sure that you guys are still with me. Okay, good. All right, you're still with me. Okay, we're on the right screen. Okay, perfect. Okay, so the fibs are really the main tool that I use for support and resistance, and really for most of my indicators telling me what to do in the market. It's just a very, very powerful tool. Okay, and so I trade the SPX. I trade options on them, and so I like to know where we are in relation to support and resistance in the market. And let me bring this one up. Okay, let me maximize this. Okay. Okay. So you can see here that I drew a trend, right? We have a trend line here. That's basically from the beginning of November. Okay. And the market, it's had its downs and ups, right? But you can see here that it's marching higher, constantly marching higher, right? And that's it's a very bullish sign. It's a very bullish market. And so I look at the way that I look at this is, I give this trend line here a pretty wide berth, right? It's not, this market's not really broken until we break this trend line here, right? And that's all the way down to 37.21. And if you look at how far that is, let's look at that. Okay. So I'm going to mark not a price level. No, I'm going to mark a trend line here. Okay. So right now we are here, 38.70. That's the high, and down to this trend level, that's about 4%. Now we get corrections all the time, right? 3-4% correction. That's nothing. Okay. So, down to this level here, and by the time it gets here, it's going to be about 3.5%. Really, the market's not broken until it breaks that trend. Okay. And then sometimes it'll breach it and come back up through it. But this market's pretty strong right now. So, and then what I like to do too is I like to measure the 200, because eventually markets always seem to come back to the 200-day moving average. And you know what? It's 16% away from us right now. So that it would take about a 10 to 20% correction if we were to get down to the 200-day moving average. But I do look at that and make sure that we're covered there. All right. So we're talking about fibs, right? So right now, what happened is, let me get rid of this. Okay. So what I would do here now, okay, and I drew this fib in September, and it's getting to the point that I'm going to have to, adjust this one for, the market conditions here. Let me see if I get this here. Hold on. My drawing tool's gone. All right. So let's change it here. All right. Okay, so this fib right now, what I have to do is I move it up to the top here. Okay, I put it up to the top, and that gives me the support level, the resistance level at the top, right? Which I like to have. And so if you look here, you can see here as the market went up, we had some congestion here in this area. And so this area here now is the 37.29 fib area. Okay, it's 786. And so these fibs are 100, 786, 618, 50, 38.2, 23.6, and 0. Okay, the big ones are really 38.2 and 61.8, just because when the market tends to retrace, and when I call a retrace is moving down from the 100 down to the 786. Okay, it goes down to the 786. It'll congest here, all right? And that's why I like to have them, because I know that when the market drops, I'll know pretty confidently that we should get at least a pause in this area, all right? Because a lot of traders are trading off of this again, right? So I tend to look at these areas and say, okay, this is probably where it's a good time to get in, in this area, at least for a bounce up, right? Trading futures, it's pretty easy to do. Okay, and by the way, micro futures are available to everyone, very, very low cost, a lot of leverage, and if you trade with like Trade of 8, basically all you need is $100 for one contract, to be able to trade a micro futures, and it's a great tool to really learn how to trade futures. When you get to the ES or the minis, the big boys. All right, I trade micros all the time just because it takes the emotion out of the trade because they're so small. But yet, if the market moves, you can make 100, 200, even 800, bucks in a day with a strong move. Like yesterday, we had a strong move down, and they clocked about 800 bucks. Anyway, I gotta get moving here. Okay, so this particular this is a retracement, and I'm looking at the time. I'm not going to have time to go over the Fibonacci extensions, but I am gonna my next one I will talk about the extensions and the ABCD patterns. Okay, but let's finish up here with the retrace. All right, so so this is kind of getting long here. So what I might do too is I might take this. Okay, and it's not rocket science. Okay, you take this to the low. All right, and I can certainly use this as well. Right, because a lot of traders will use it as well, or I can even bring it higher. Okay, and I use the I use the hourly too in shorter distances for, as a retrace. Okay, and so and then when the market comes down, and let me share that with you too, because you can certainly do this. Okay, I'm going to take out that line there, and I'm going to put a retracement from this point here down to this point. Okay, and that's a very it's a so if the market were, let's say, here, right, we didn't know. Let's see if I can get it there. Okay, so we know that the market moved down here and started moving back up. Okay, so now you know that once we get past the 23.6, it's usually a good sign that it's a reversal. A lot of times what the market will do, it'll go down and it'll stay below this 23.6 here. But you can see here that this thing rocketed up after it went up. And once you get past the 786, right, or the 618, it's usually a good it's highly probable by that time that it will take out the high, right? So it's a good chance to stay long and ride this thing out. Okay, but you can use retraces like that, or from again from the bottom or going up is what I do for my for my daily trades. Okay. Okay, so we're here at 30 minutes. I don't want to go longer than that today, but I will cover Fibonacci extensions in my next trade talk, and that one's that one's a great tool to use because it gives you the ABCD patterns in trading. All right, so hopefully you enjoyed this, and Okay, let me get the questions real quick. I've got 5 minutes to do that. All right. What is the oscillator at the bottom of the MES chart? Okay, I think I missed your question, but what that was the RSI. It's just a straight regular default RSI that I use. Okay. And I have some videos that I talk about convergence that I use with RSI, and I have that in another video. The 100 fib anchor, I think I talked about that, Greg. That was the I guess the anchor at the bottom where you're talking about it. That one in particular was from September, the bottom, and then I moved that over to the one in October just now. Okay. And okay, all right. I see that you saw it. Okay, so I don't see any more questions. Hopefully this was of value to you, and I'll talk to you guys next week with the ABC extensions, and I'll cover that. All right, thanks. Have a great day, guys.